Hello trading friends, and welcome back to Forex Focus, brought to you by IG. We've got an interest rate outlook for you here today, and good timing as we've got 10-year yields hitting a new year-to-date high, 4.4%. We'll dive into that in just a second, but we're also going to highlight the ever-changing interest rate projections from the Fed's point of view, as they have not hiked or cut interest rates in several months now. They've been sitting north of 5%, and the expectation here in 2024 has been cuts. Haven't gotten it yet, and we're already a quarter of the way through the year. We'll see where futures traders are projecting interest rates to be from the Fed's perspective by the end of the year, as there's a growing chance of no Fed cuts. We'll let you know what that chance is in just a little bit, but let's start on the Treasury front, as the 10-year benchmark for interest rates here in the U.S. did hit 4.4% in recent trading. That is a new year-to-date high in terms of 10-year Treasury yields, and that is going to be the high since really November, December of last year. Now, you'll remember that 10 years hit multi-year highs of close to 5% in October, November of last year, before falling back below 4% to end the year. So a huge, whopping 100 basis point fall in the last couple of months of last year. Now rallying back up, and you can see really year to date, this is a rise of close to 50 basis points, if not more than that, to get to 4.4%. And this has been for a multitude of reasons. One, I mean, it was a huge move to go from close to 5% to below 4%, so a little bit of a bounce back. But also, we've been seeing very strong U.S. data here in 2024, and the expectation was that the U.S. data was going to finally take a breather. That's why you saw so much interest rate bearishness to end last year, and stock market bullishness to end last year as well. Is the expectation is, the data is going to take a break, inflation's moving lower, employment data will take a break, we'll maybe take a little hit in GDP, but it'll all be good for stocks because the Fed will cut interest rates. Well, not only have we had continued strong U.S. data, but we've had Fed speakers, including Powell and a host of others, that have been a little bit more hawkish than expected, and they, in the meantime, haven't cut interest rates. Here's the Fed funds interest rate that got up to 5.5% in the middle part of 2023. I believe the last hike was in July of 2023, and it stayed there flat now a quarter of the way through 2024. And so again, there was the expectation at the end of 23 that the Fed would start cutting interest rates in 24, and you saw 10-year yields move lower. You saw most yields across the Treasury curve move lower in that time, but the interest rate hasn't moved lower yet. We haven't, even though Fed Chair Powell has said that they're expecting to cut rates at some point this year, hasn't happened, and we're now into April. And let's actually take a look at what the Fed was projecting given their last dot plot that we saw from the FOMC. And you can see even the dot plot saying that, yeah, we're expecting cuts as the distribution for 2024, the leftmost column on your screen, is hovered around 4.5% to 5%. And I just told you that interest rates are currently at 5.25% to 5.5%. And so that's lower than current by the end of 2024. The dot plot shows that, and then on to 25 and 26. And in the longer run, you can see that Fed members at the last dot plot that they sent out, they think that interest rates are likely to continue to normalize lower into the 3% to 4% range in the next couple of years, and then in the longer run, around 2.5% to 3%. But again, we haven't got one of these cuts yet, and projections around these interest rate cuts are getting interesting, let's say that, because in the same time that the 10-year yield has gone from below 4% to now almost 4.5%, the projections from futures traders in the Fed funds futures market have gone from around 6 cuts at the end of 2023 to now around 2 to 3 cuts. And a couple of other interesting things that we'll get to here in just a second about this distribution curve that you're looking at. But first, I'll let you know what you're looking at. This is the distribution of projections for the Fed funds rate by the December Fed meeting, the last Fed meeting of 2024, when they have the opportunity to change interest rates for the last time. Theoretically, they can have an emergency meeting and change whenever, but December 18th is likely the last time that they would change interest rates this year. And you have essentially 65%, the bulk of this distribution, hovering around 2 to 3 25 basis point cuts, or effectively 50 to 75 basis points worth of cuts this year. And this distribution was hovering around more like 6 of those cuts, or 150 basis points worth of cuts just a few months ago. Not only that, my friends, but there's also this growing chance of no cuts in 2024, now close to 3%. Doesn't seem like a lot. You might say, Frank, that's a rounding error off of 0. But I've watched this thing go from 0% chance of no rate cuts in 2024 at the end of 2023, when they were pricing in 6 rate cuts, to now a couple of months ago, it was around 1% chance of no rate cuts, and that's when they were pricing in more like 3 or 4 rate cuts, to now they're only pricing in 2 or 3 rate cuts, and the chance of no cuts in 2024 up to 3%. And so still highly unlikely. It's the outside chance for sure. But it has been growing as Treasury yields have moved higher, as the U.S. data has continued to come in strong. The idea that the Fed will cut at some point this year, Powell is still saying it. That's what the Fed is still thinking in terms of their most recent speeches. But the market is starting to price in a chance that they don't end up cutting. And of course, if they continue this rhetoric of we're not cutting now, but we will cut at some point this year, and we get into September, October, November, around the presidential election and everything else, they might just punt to 2025. So we'll see what happens. Still looking at about 2 to 3 rate cuts. And of course, 10 years are at 4.4%. They've been as high as 5%. And so not back to those interest rate highs that we've seen in recent years, but they're traveling back that way. And we'll see if and when we finally do get a rate cut from the Fed.